So my topic 21 is wage growth versus the cost of living growth and an impoverishment cycle, basically. So it's me attempting to prove to you that even though your wages may go up in US dollars, your true wealth may still be declining in those same US dollars. And that is exactly what the truth is. And I'm going to try to prove that to you here in just a moment. All right, so let's look at this is the United States average hourly wages. Okay, so the average hourly wage today is almost $32 an hour. Okay, we can go back to, let's look at some historical periods here. So if we go back to 1980, we were looking at the average wage being about $6.50 an hour. Year 2000, the average wage was about $13.83 an hour. The trend is upward. Wages measured in dollars. Okay, dollars are an illusion. Okay, they are depreciating in value. They are losing purchasing power. And I'm hoping that some of the charts I've shown you already prove that to you, but the rest of them will for sure. So let's not measure things in the US dollar. Let's measure them in gold instead, okay? Or any commodity. I can measure them in oil if I want to. But we're going to use gold as an example for most things here. So instead, let's look at that average US wage paid in gold. So back here, this high point, 1970, which is the beginning of our super cycle in commodities, okay? If I were to pay the average US worker his wages in gold, I would have paid him 0.09 ounces of gold, okay? Here, in 1980, gold went up incredibly high values, but wages did not keep up. I would have only paid him 0.01 ounces of gold. Okay, so that is inflation. That is that employee lost purchasing power. His wages did not keep up with the true value of wealth or gold. Ultimately, what I'm trying to show you here is, what is the trend? Trend is downward. That is a downward trend. Okay, so if you're being paid in gold in 1970 and you make the average wage in 1970 and you continue to make the average wage today, you have gotten so much poorer since 1970. It's ridiculous. You went from being paid 0.09 ounces of gold to being paid 0.01 ounces of gold. That is a 91.99% decrease in wages since 1970. As with everything, nothing goes up in a straight line, nothing goes down in a straight line. We overshoot, we undershoot. But the point of showing you this chart is, if I take the average wage and pay you in gold instead of dollars, you think your wages are going up. Every year you get a 3% wage. The United States government measures inflation using CPI. CPI is a lying chart. It hides the true cost of inflation. It shows you this moderate 2 to 3% increase in inflation every year. The truth is much higher than that. And it moves in cycles. It's not always higher than that, but historically it is much higher. Since 1970, if CPI were correct, and we've been at 2% inflation historically, and I got a 2 to 3% raise every year, wouldn't that mean that my line would be flat or slightly above inflation? If I got a 3% raise and inflation was 2%, I would expect my line in wages paid in gold to look something like this, just a slight upward trajectory. But what are wages doing? True wages, not dollar wages, are drastically declining. You are getting poorer and poorer and poorer by the day. Okay, you'll see the cycles here, they all coordinate. This is around the year 2000. What is the year 2000? You know, we looked back through all of these charts. What are some big years? 1940, 1980. That is an interest rate cycle. 1970 through 1980. That is a commodity cycle. 2000 to 2010, another commodity cycle. Okay, so these wages on this scale are basically showing you the commodity super cycles, right? 1970 to 1980, 2000, 2010. The new one is basically 2021 to 23, somewhere in that range, to probably 2030 to 2032. We are about to lose even more of our purchasing power. Your wage is not going to keep up with the cost increase in commodities, as evidenced by gold right here. All right, so let's look at the federal minimum wage. Let's go way back in time here as well. These blue lines, mark trend changes, basically. Okay, so starting in 1949, 1950, the start of a trend where U.S. minimum wage basically grew on this trend line right here. And in 1980, that trend line changed and created a new trend line. How do I know that? Well, okay, if I connect all the tops here, it shows me the trend. So what does this mean? Okay, today, minimum wage is 7 something per hour. Okay, 7.25 per hour. Now let's compare this to the minimum wage in 1950. 1950, the minimum wage was 75 cents an hour. Okay, in 1950, was I richer or poorer in terms of my wages being paid today? I was extremely richer. If I'm the bottom end of wage earners in 1950, my standard of living is the same as if I were paid $30.21 an hour today. So you're sitting here wondering why it's becoming harder and harder to afford a house, and why the lessons of your grandparents don't work anymore. Well, it's because your grandfather wasn't a financial wizard. He was paid more. Okay, so if your grandfather was a low-skilled worker making 75 cents an hour back then, he was living as well as you would be today on $30 an hour. Of course he had an easier time buying a house and making ends meet and not sending his wife to work. Okay, well, what about 1980? If we were to take the minimum wage in 1980 of $3.25 an hour, give or take, I don't remember exactly what it was, but I'm pretty sure it looks like about $3.25 an hour. In 1980, if you were to maintain the same standard of living today, that would be the equivalent of being paid $11.55 an hour. Well, is $7.25 greater than $11.55? No. So your standard of living has declined immensely. Since 1980, it's almost gone down by half. You're almost half as well off as you were in 1980 making the minimum wage. All right. Now, let's look at the federal minimum wage paid in gold. Okay. So if I didn't pay you in, this chart shows you minimum wage is going up paid in dollars. Maybe not as much as it should have been, but, and I'm not discussing whether minimum wage is right or wrong here because I can make arguments on both sides, but ultimately, measured in US dollars, it looks like minimum wage is going up and up and up. Or is that truly the value of the dollar losing value? That's exactly what it is. Because if I measure the US minimum wage in gold, you'll see back here in 1970, if I were to pay you your minimum wage in gold, I would have paid you 0.05 ounces of gold. Today's minimum wage, I would pay you a negligible, it doesn't even register. I don't even know what the percentage, what the ounces of gold is. I'd have to add a decimal place to it. But here's what we'll do. We'll take a percentage decline measurement. So from 1980, if I were to pay you in gold, your true wages have decreased almost 100% since 1980. What does that mean? That means your standard of living is half as good as it was in 1980. Well, of course, you can't afford anything. Now let's ask ourselves another question. What was the interest rate in 1980? Oh yeah, 18.3. So in 1980, my standard of living was better with 18% interest rates than it is today with historically low 6% interest rates on mortgages. I'm begging you to understand, you are about to lose your standard of living. Everything you think you know is about to change. This 96% decrease in standard of living in federal minimum wage over the next 40 years, it's going to be catastrophic. People will not be able to afford to put roofs over their heads nor eat. Let's look at compensation of employees in general. So this is just the aggregate just to show you of all wages in the United States, right? So the aggregate of all wages is $13 trillion today. It's an upward trend, right? So since going way back to 1959, wages have increased when paid in dollars, but instead let's pay it in gold. So if I pay it in gold, where are wages? They bounce all around, right? So up, down, up, down. But what is the overall trend? Well, I'd say that the overall trend is probably a downward trajectory. This is probably the true wage paid in gold, or true total wages in the United States paid in gold, as opposed to paid in dollars. Sometimes it overshoots fair value, sometimes it undershoots, but the trajectory is downward. So